Well, howdy there, folks, and welcome into this five videos for me to react to here today. It's a beast one. First one up here. I don't see how the market can go any higher than this, says Jenny Harrington. Want to hear what her perspectives are on the market. Larry Summers, inflation fight isn't over. Want to hear what he has to say, react to that one, kind of give my opinions and perspectives. Without recession, high price inflation will be with us for life. So this is a belief that there's no way possible that inflation can completely go away, let's call it to the 2% level at least, without a recession. So we'll speak about that as well. UAW's Tesla push could push Elon Musk into robotic car building faster, says Ross Garber. I thought this would be a fun one to react to and kind of share my opinion and perspectives. And last one up here, Mr. Dan Niles. Amazon is our favorite Magnificent Seven stock. Obviously, I'm an Amazon shareholder, so I'd love to speak about if Amazon is my favorite stock of the big tech. So yeah, five piece here today. Appreciate everybody joining me as always. New all-time high subscribers in the history channel. Just want to jump straight in this one. By the way, if you're looking to apply, join my private group this upcoming week. Apply with the pinned comment down there, and we can see if we can get you in there this week. Alrighty, guys, let's get into this.
You know, he's been negative, Joe, on the market. Now says technical factors no longer stand in the way of a year-end rally. With oil under 100, yields below 5%, S&P trading above the 4,200 level, positioning could pick up again. So this is what, you know, the bulls have been playing for. Positioning coming into the end of the year, and you're getting exactly what you need. Oil not rocketing higher on the Middle East. Yields not rocketing higher because Powell was dovish in the news conference, had many opportunities to talk the market off of where it is relative to future hikes, and he did not do it.
So everything you just described, what's the strongest impact on the market itself? You are only as strong as your weakest link. The weakest link in the market has been the Russell. The weakest link has been the regional banks. The weakest link has been real estate. Real estate's up 3% today. Regional banks are up 4%. We now have consecutive days where we're seeing the Russell leading the market higher. So what does that do? That provides stability. And when you have stability within the market, you could begin to re-engage with a degree of optimism, and you could point towards Brian's target and begin to build the evidence that's on why you can actually get there.
So Morgan Stanley's Mike, I refuse to throw in the towel, Wilson, says don't count, Jenny, on a year-end rally. Quote, we think the S&P 500 price action into year-end is more likely to come down to where the average stock is trading rather than rallying to higher levels because breadth typically leads price. Well, ooh. I mean, breadth is improving, to Joe's point, by the day. The gains over 1 week in the major averages are pretty stunning. The Russell, as Joe said, is up near 8%. 8% in a week. That tells you where the breadth of the market's going. Financials improving, regional banks looking better. A lot of these areas that have been severely depressed are
First off, that is pretty amazing. Like 7.7% in a week for the Russell. What a move. We do know the Russell at some point is due to go on a ridiculous run, right? Russell stocks have been extremely undervalued based upon any historical standard over the past 20, 30 years. They've been extremely undervalued for basically a year and a half to 2 years, actually, closer to 2 years now at this point in time. If you look at any time period really in the past 25, 30 years for forward Ps for the small cap type stocks. So these stocks are due for a epic run. And when I say epic run, I'm talking about a 20, 30, 40% in a 6-month type epic run, right? Maybe this is the start of it, or maybe this is just a fake out, back down, and we have that run at some point in 2024.
So I agree with Mike. And I agree with Mike on simple math, because let's remember too, Mike's comment is based on the market, which is the S&P 500.
Yeah, I know. The S&P is up near 6% in a week.
Correct. And I think that's as high as we can get. And the reason being is, if we look at 2024 earnings, 2024 consensus earnings are $247 a share. To go from 2023 to 2027, we need 11.5% earnings growth. We're not seeing that. So I think the $247 consensus estimates next year, those are too rosy. You take an 18 times multiple, which is where we're at right now, and the market between now and next year or now and tomorrow is flat. Like, there's no more room for upside from here. You can only get that upside if either earnings grow even more aggressively.
Yeah, but I'm sure you would have said that last week. There's no room for upside from here.
Oh, no. I think we're stuck in this range. And actually, last week, I kind of had the same math out there. And when we were at 41.50, it looked like if we kind of got to 18 times and we did get to 247, like maybe you had 6 or 7, I think we're stuck. I've been thinking that we're stuck for a very long time.
We're
and I think
up 200 points from 41.50.
It's just we're going to bounce.
Okay, so first off,
right, and I think I hate using this jargon, but I would fade it around 4,400 or 4,500 on the S&P 500. I don't see how you get higher. What I think is interesting is the unbelievable rotation, which is what Joe started to touch on. So our portfolio, right? Like I had 4 stocks in the portfolio yesterday in the dividend income strategy that were up over 10%. That's crazy. Only one of them was on earnings. Why were they up so much? Because of interest rates coming down. And they're wildly, wildly oversold. So that's why I wanted to say, when Mike Wilson says the market, I agree with him. Where I think there's operating, like, look at the Russell, right? Look at things.
Okay, so let me hop in here, okay? First off, this is so important. I don't hear anybody talking about this. And it's so freaking important, okay? Look at companies that are some of the biggest companies that matter in the stock market overall, okay? These are stocks that drive the indexes. And think about these companies for a moment. Meta, growing their bottom line by triple digits meaning over 100%. Amazon, growing their bottom line by over triple digits. Nvidia, growing their bottom line by over triple digits, okay? So these companies are expanding their bottom lines at one of the fastest clips we've ever seen in history. Now, those clips should in theory slow down in 2024. But the question is, what do they slow down to? 20%, 25%, 30%? That's still insanely strong growth for those companies, right? Take this a step further. Apple's revenues went down last quarter. Actually, they've been down last several quarters. Now, despite Apple's revenues being down, their earnings per share has actually been going up by double-digit percentages. Now, let's imagine a scenario for Apple where eventually their revenue goes up again at some point in time, right? Whether that's 6 months from now, a year from now, 2 years from now, whatever. Like, what would happen to their earnings per share if their revenue actually started going up again, right? You look at Google's earnings, very strong earnings out of Google. These are the most impactful, most important stocks. Look at Microsoft's earnings. I mean, they're phenomenal. So when you look at it from that context, you can see how the market could actually go significantly higher from here, right? Unless there's a massive deterioration in the underlying economy, like you can see how these stocks could actually have a pretty nice rally into year end or even a very nice rally in 2024. Then you look at small caps like we spoke about before, which those ones don't move the market much. They just don't, right? Other than the Russell 2000 index, but those ones don't move the market much, but those stocks are trading pretty much at the most undervalued valuations you'll find them at outside of the lows of the great financial crisis. So let that sink in for a moment. Dividend stocks are trading at 5, 10, 15-year lows for most of those stocks. Literally, if in the past month, many of the most impactful dividend stocks out there have hit, 5, 10, 15-year type lows. So when you look at it from that context, you can see how there's actually several different ways the market could go actually significantly higher from here. And those are some things that should definitely be taken into account, right? There's many different scenarios that can play out in the market in 24, but one of the scenarios is the market goes significantly higher.
Out of favor. Look at, Weiss and I got into it last week on regional banks. Like, I don't want to go long regional banks, but there are regional banks out there that are wildly oversold. So I think it's a stock picker's market. I think you have plenty of opportunity to pick off individual names that are way low, but broadly for the market, I don't see how it goes higher than this. The math doesn't work to get you there.
Disagree with her. I disagree with her. Disagree with her significantly, right? No, first thing I do agree with her with. I got to be very clear about this. I do agree with her stock pickers market, and we've seen that this year. A lot of stocks have done horrible. Other stocks have done tremendous, right? I mean, I've been in a lot of companies this year that have been skyrocketing the moon while a lot of other stocks have suffered tremendously, right? As somebody that owns Palantir stock, damn, it's been a hell of a year. As somebody that owns Meta stock, it's been a hell of a year. As somebody that owns Tesla stock, it's been a hell of a year. As somebody that owns ELF stock, it's been a hell of a year, okay? A lot of those stocks have done tremendous. There's other stocks out there that just can't get a break. A lot of my dividend stocks can't get a break this year. They've just been floundering, not doing a dang thing. Lucky enough, I'm positioned heavy into a lot of those other stocks that are doing tremendously well, and I have smaller positions in a lot of those divs. But the part I disagree with her, once again, and I want to make the same point again, but look at the biggest big stocks out there. Their profitability skyrocketing. So this, trading at 18 times, I don't know about that. I don't know about that, folks. I don't know about that. Okay. Already, next one up here, Larry Summers. Let's hear what his opinion is on inflation, the market, stocks, and other things.
If we could, on Friday with the jobs reports, came in a little bit softer than when anticipated, 150,000 or 180,000. Are we starting to see that slowdown that we need in order to get inflation under control?
I think it's hard to know. There was an automobile strike. There's a lot of fluctuation from month to month. The labor market's not quite red hot in the way that it was a few months ago, but whether it's in a place that's consistent with sustainable inflation, at 2%, I think that's still very much in doubt. Though this was a favorable number, but I don't think anybody should overinterpret it.
Well, talking about overinterpreting, what about what Chair Jay Powell had to say actually earlier in the week? Because the markets certainly ran with it. They basically took it as saying, we're pausing, we're not going up anymore, happy days are here again. Are the markets overreacting to think about where we are and what actually he said?
I think it's unfortunate when there's excessive volatility in either direction in response to Fed meetings. I think smoother communications that induces less sharp volatility would probably be better, though it's obviously a very difficult role that the chairman has. I am not confident of a central element in the Fed's thinking, which is they can regard higher long-term rates as some kind of contractionary impulse to which the right response is for their policy to be easy. If, for example, the higher rates are coming from a sense that we're going to have larger and more expansionary fiscal policy, or a sense that we're going to have more robust investment demand down the road, that is not a basis for lowering rates or having easier financial conditions. Even if it comes from an increase in the term premium, it's not really clear how big the impact of changes in the term premium is on stock prices or business investment decisions. So I think the argument that was being made is a bit less ironclad than the chairman suggested. And I think that in general, the kind of very dramatic response we've seen in interest rates this week, the longer term, and in stock prices make me not as certain as many people that the job of containing inflation is over.
All right, I've listened to a ridiculous amount of earnings calls, conference calls of companies so far this earnings season. Let me tell you what I've heard from these companies, right? I have heard very few companies talk about they're going to be going up on price. I mean, I can't even really think of any off the top of my head that have they're basically talking about, we need to go up on price. And now it's a very different tone, I can tell you, than 6 to 12 months ago. Because 6 to 12 months ago, especially 12 months ago, I heard a lot of companies still talking about, we need to catch up to inflation. We got to raise price on this, whether it be restaurants, whether it be companies that sell into retails like consumer products, those sorts of companies. Man, did I hear so much talk a year ago at this time about companies needing to go. I just don't hear that talk anymore. And like I said, I really listen to so many conference calls on so many different companies and so many different industries that are at so many different stages of growth profiles and all those things. I'm just not hearing it. And so that makes me feel very comfortable about what inflation rates will be in 2024. On top of that, energy is a huge component of that. If you look at crude oil over this past year, it just hasn't really done anything. It's been up, it's been down, but ultimately it's actually lower than it was a year ago at this time. If we look at GSG commodity index, it's around the same as it was a year ago at this time. So from the commodity side, not really seeing the pressures there that's going to say, 2024 is going to be super high inflation. Housing is a huge component. Houses are not more expensive right now than they were this time last year when it comes to home prices, right? The cost of owning a house might be because of interest rates, but that's not the way inflation really looks at it. It looks at it, home prices in general, right? Rents in general. The bottom line is you can't get a higher rent today than you could have 12 months ago. You either have to keep your rents pretty much flat versus a year ago at this time, or potentially even seeing declines or doing some sorts of promotions about free months and things like that. So just the reality is inflation should not be an issue in 2024. Now 2025 and beyond, who knows? That can always change, right? But the bottom line is for 2024, we're setting up really good in terms of inflation and getting to finally the government numbers being a CPI in the 2s. So that's, it's just facts. Like, it's not like it's really a debate. You just got to look at the facts. You got to listen to companies. You got to look at what's going on in commodities, what's going on in energy. You got to look what's going on in housing, what's going on with rents. And just all the facts and the data are going to show you that inflation should not be an issue for us in 2024, right? In future years, you never know. But for 2024, we're looking pretty darn good.
And that the war is done. They're right to be watchful and waiting, but I think people are a little bit in too much of a hurry to declare that we've done all the monetary policy that we need to do.
What do you think about the job the Treasury is doing managing this? We have something, a dispute right now between Stanley Druckenmiller on the one hand and Janet Yellen on the other about exactly how they're terming the debt.
So I don't want to get in the middle of that dispute, but I'll say this: if you take the combined job that the Treasury and Fed did at the moment of maximum opportunity to issue long-term debt in 2021, when rates were on the floor, they were busy stretching out, terming in the debt, mostly due to quantitative easing that wasn't being offset. The Fed's lost probably hundreds of billions of dollars in market value of its portfolio. The Fed's remission back to the Treasury is much smaller than it could have been because of those losses, and is actually turning negative, and that negative isn't showing up in the fiscal accounts. So I don't think our debts have been well managed over the last few years. I think a corporate treasurer who had been moving all through 2021.
So to be clear, he's pretty much taken the side of Stanley. He's pretty much taken the side of him. Yeah.
To floating rate debt, or more floating rate debt, would kind of have surprised his CEO and maybe wouldn't be looking so strong today.
Well, obviously, the reason we have the debt is because we're spending more money than we're taking in. Let's talk about the taking in part, because we had developments this week where the House of Representatives, the Republicans in the House of Representatives, had a new bill for support for Israel, and they said they were going to pay for it by cutting back on something you had been advocating, actually, which is more resources for the IRS, even though CBO, Congressional Budget Office, said actually it's going to increase the deficit. I know you feel strongly about this.
So look, we have to be a serious country in a very dangerous world. And that means promptly voting financial support for Israel and for Ukraine. And if we don't, it's going to have a very important effect on American leadership. In terms of how that is financed, the single most foolish way to finance that would be with further cuts in the IRS budget. They would raise the deficit and debt over time as we collected less revenue. They would exacerbate inequality because the principal beneficiaries would be affluent people who had cheated on their taxes. And they would demoralize the overall tax system where the vast majority of people are honest.
Larry, it's a dangerous world. It's also a divisive world.
So, obviously, controversial thing, because, I mean, when it comes to IRS, technically, it's the, if you're talking about a return on government employees in terms of what they bring back to you, obviously, it's pretty immense because, they can bring back a whole lot of money for the government in terms of what that IRS agent's, salary is versus what they bring back to the government, right? But also, a lot of people don't like the IRS because, at the end of the day, it just feels like, somebody's like after you all the time, right? Whether that's true or not, it just feels like, they're after me, right? It's like having a police car behind you as you're driving, right? And you're like, what are they after me? They're going to put on their sirens. Like, did I do something wrong? You get more worried, right? It's almost like a fear and an anxiety. And it's very similar when it comes to more IRS agents being hired. So that's why a lot of people don't like it. But at the end of the day, let's say, a rich person. Okay, I don't know. They got a $75 million net worth and they cheat on their taxes and they cheated, and so it saved them an extra $1 million, okay? At the end of the day, the million's going to eventually get spent. And it's likely going to get spent in the United States over time, right? Because people spend the money, right? They do this, they do that. Next thing you know, they die eventually over time. That family's given to, or that money's given either to charities or that money's given to their kids. And we know kids spend a lot of money, that are the beneficiaries of people that are high net worth. So, I understand from kind of both angles. That's the best way I could put it. But the bottom line is that money's eventually spent. That money's taxed on when it goes out there and spent in sales tax and other taxes. There's a million different taxes out there. So, I don't know. I just feel like a lot of that money ends up back in the government's pocket at the end of the day. Anyways, maybe it's just a little bit longer of a cycle.
Seeing some of that division right back here in the United States, something we've talked about on this program before with you, Larry, but it doesn't seem to be subsiding. Some of the turmoil, the roiling on college campuses right across the country as people pick up sides, and a lot of anti-Semitism, frankly, is being expressed. Where do you think we are right now, and what can be done, particularly?
We're not going to get into that subject again. It has nothing to do with the markets or anything like that. It's just, very controversial kind of sides of both sides from my angles. Next one up here. Without a recession, high price inflation will be with us for life. So this is a view, by the way, that you cannot get inflation to a fairish number, let's call it 2%, without a recession. That's an interesting view.
John Kennedy, Republican from Louisiana. He serves on the committees for appropriations, budget, banking, and judiciary. Welcome back, Senator. Good to have you here.
Good to be here.
I'm going to start, if I might, with sort of the same question I asked Representative Sherman just a few moments ago. From where you sit, representing Louisiana, home of the new speaker, by the way, we'll get to that topic in just a moment. How do you grade or assess the economy? Obviously, inflation is coming down, but prices are still higher than they were 2 or 3 years ago. The economy seems to be growing nicely, 4.9% in the most recent quarter. How do you see it?
I give it a D, and I'll tell you why.
A D?
Yeah, I can tell you why. I look at more than GDP growth. GDP growth has been okay. Inflation has not. And if you look at all of America in granting that grade, you have to consider all Americans. And many Americans, many people in my state, have to sell blood plasma in order to go to the grocery store. Yes, inflation has fallen, but we all both know that's disinflation. That just means it's going up less rapidly. Prices have not fallen.
Fair point.
Unless we have a recession, a fairly serious recession, these high prices are going to be with us for the rest of our lives.
Okay, so this man basically wants a rough recession, let's call it, okay? How quickly we forget the great financial crisis. How quickly we forget, right? Okay, have a really rough recession, right? And then people don't have jobs. They don't have incomes. And guess what they have to do at that point in time? Either resort to crime or resort to government assistance. If you can't get a job, you have to either do one of those two things. You have to go to crime or you have to resort to government assistance if there's no job opportunity out there, right? And you can't find anything and it's like, I got a family, I got to have a roof over my head. At that point in time, and unless you know a rich relative that can help you out, which most people don't, then they're stuck in that situation, right? And then you got a whole other host of problems on your hands. And so it's like, great, we got gas prices to go down. Okay, yeah, now no one has a job to pay for the gas, so they can't go anywhere, and they can't go to the restaurant, they can't do this, and they do that, right? So, I just think, maybe we do need a true, real recession, so then people like this can remember what actually happens during that time, right? When you're thankful for a minimum wage paying job, that's a real deep recession like he's talking about here. So yeah, we get prices down, and then, it's a rough situation. And guess what then has to happen? Budget deficits get worse than ever. Debt goes more out of control because then the government has to come in with huge food stamp programs. They have to come in with huge spending packages to try to promote even more jobs, right? There's a whole mess of things that go on. State budgets get messed up really bad. Guess what? You're going to collect way less tax revenue. as the government, right? Whether it's on a state level or a federal level. If people are making way less money because you're in a recession, people don't have jobs, the people that do have jobs aren't making nearly enough because their wages got cut. Now the guy that was making $100,000 a year just got his job, his wages cut to $50,000. Now the guy that was making $50,000 is now working minimum wage. Now the guy that was working, minimum wage or a little above that doesn't have a job. It means a lot less tax revenue. So it's like, oh yes, the bag of potato chips is on sale, 75 cents cheaper. Woo! Yeah, we have no jobs.
By any standard.
Very strong.
You cannot give that a D.
And if you look at history, going all the way back to the 1950s, the 10 periods of disinflation that we have had since then, based on history, unemployment ought to be minimum 6%, 7%. It's obviously not, and that's a good thing. But I think what has skewed that was the pandemic, and there was a lot of slack in the labor market that has been absorbed. But let me say it again, I give it a D because the economy serves the American people, not vice versa. And the American people, because of inflation, are hurting badly. And even those who have seen pay raises have not seen raises higher than the rate of inflation.
So if we turn that,
I think it's also important, for context. This gentleman, senator from Louisiana, right? Not the most exciting state, certainly, when it comes to what's going on in their economy. I can't think of one damn thing exciting going on in Louisiana versus, a state like mine, Nevada. It's just, we have so many exciting things going on. It's hard to even fathom it, right? You go out to Texas. I mean, it's just, you're going to have a different view if you live in different states. And living in Louisiana, like, I wouldn't even be in my top 10 states of like, I want to go to Louisiana. Like, hell no. Like, first thing I'm thinking about all the states that have no income tax. And then I'm thinking of, okay, which one's the best out of those ones, right? And then I'll think about, okay, who's the lower brackets? Okay, who's got things actually going on exciting in the economy? Who's got the types of cities I'd want to live in? Not Louisiana. No disrespect to Louisiana. They just don't have it going on like that.
The top orders of business in Washington, foreign aid, obviously one of them. We were just talking to Congressman Sherman about how exactly that's going to happen. Not clear if these IRS cuts are the right way to try to offset that spending. Is it important to offset that spending or just more important to get the aid out the door?
Well, I'm glad to see somebody is thinking about offsetting the spending and not just borrowing more money. Looking at, I think, the way most Americans look at it, there are two major issues right now. They're not the only issues. Number one, the biggest domestic issue is inflation. And the president does not have a plan to deal with inflation.
But the Fed does.
The Fed does. But you can't really get inflation under control unless you attack it on the monetary side by the Fed and the fiscal side by Congress. And the reason that the president doesn't have a plan for inflation is because it would require him to spend less. Number two, the biggest international issue obviously is parts of the world are on fire. And it is clear to me that China, Iran, Russia are working together. Their goal is to have China dominate the Indo-Pacific and sub-Saharan Africa, have Russia dominate Central and Eastern Europe, and have the Ayatollah in Iran dominate the Middle East. And that is not a world that is safe for America, and we have to address it.
So let's talk about the question of sending military aid to Ukraine and to Israel at the same time to fight Hamas. Do you expect that those two items will move together through Congress, move separately through Congress, and where specifically are you on sending more military aid to Ukraine? And
I'm going to say he's probably going to be
good question, as usual. Right now, present company excluded. Most members of the media on Capitol Hill are interested in talking about process because process is sexy. Who's mad at who's up, who's down, who's got a leg up. I'm more interested in substance. We don't know what's in this bill. We know it covers Taiwan, Ukraine, Israel, the border, and a whole bunch more domestic spending. But we don't know the details. And I had a conversation.
This is the bill that's come out of the administration.
This is a supplemental. And I had a conversation with Senator McConnell before I came over here. I said, Mitch, we got to saddle up and ride. Okay, we need some language that everybody can look at so we can look at the substance. Forget the process for a second. Okay, that's what a lot of people want to talk about. Has the House gotten the edge over the Senate? I don't care. That's not, I mean, I'm interested in the substance.
But don't the dollar figures tell you the substance? I mean, it doesn't sound like there's that much in the shadows here if it's basically as described for Israel, Taiwan, Ukraine, the border. I mean, we've seen the dollar amount.
Pushed
so what's the
questions that weren't even answered yet.
It's how they spend the money. I've seen plenty of money go to presidents for border security. Well, define border security. Some presidents define it as securing the border. Others define it as buying more welcome mats.
Good stuff. So I mean, I would have loved it. He just missed. He didn't even like address several of the questions he was just directly asked. But I would have definitely pushed him on that and made him say one way or another. But anyways, UAW, Tesla to push could make Musk more into robotic car factories. Now, I think, first off, before we get into this, I think it's important that everybody understands that Tesla already tried going the robotics route years ago, heavy. And they still do use robotics, no doubt, but Elon Musk, and he said it himself, they went too far as what they were trying to do with the robots. Now, this was years ago, so technology changes over time, but I just think it's worth addressing that Musk actually took a lot of the robots out of the facilities over time and put in more humans, okay? Because he found that the humans were just faster, better, and more efficient at doing a lot of these jobs than the robots were. Musk really had a future of like the robots build the robots, and it's just like a whole system and very minimal human impact. And then he just found that didn't really quite work. So, but that was years ago, right? Things could always change in the future, and 3 years out, 5 years out, 10 years out. Maybe it's a different situation, but looking forward to getting into this one.
Gerber Kawasaki President and CEO Ross Gerber on all this, because you're a longtime Muskian, Musk fan, Muskrat, I don't know. Anyway, Ross Gerber, Elon Musk and AI, like what is, I understand Microsoft and Google and everybody else. What's the Musk plan for artificial intelligence?
Well, I think that's what we're waiting to find out, because we've seen some great examples from Microsoft and Google and some of the other, really quick, I think, applications that are being built for AI, just like this is. Assuming it's around a large language model, I think it's just about the way the information is being given to us in a way that I think he feels will be much more accurate, fair, and safe for users. And we've seen that with chat and with Google, where certain topics, like we just punched up some cannabis information the other day, and it Google spit out the information and then it blocked it. And we were like, dude, did that just happen? It won't talk about cannabis, So I think that
such an
AI, and there's lots of positives, and I do think it's a transformational moment. And just like Elon, I think there needs to really be some good guardrails around it.
EVs, space travel, Neuralink, Starlink, probably other stuff. Is Elon Musk, X, of course, too powerful?
Too powerful? I don't know. I think...
Ross, I literally have progressive friends who are terrified that he controls the car market, the space market, the global, satellite internet market, Neuralink.
And I would call those people not very educated. Not very educated, okay? Because just as a Tesla shareholder, we do not control the car market, I can tell you that. We're going to be a big dog someday, but we're still not even that big of a dog yet in this fight. We've got a lot of growth ahead over this next 5-10 years. So in terms of space travel and what's going on there, no, he's got serious competitors, okay, including Mr. Jeffrey Bezos.
He controls the messaging on Twitter/X. I mean, they're literally terrified that Elon Musk...
And X is a little guy. X is a little guy social media. Compare X to TikTok, compare to Instagram, compare to, Facebook is a little guy, little guy.
Take over the world.
Well, fortunately, at least with my interactions with Elon for a decade, I don't think his ambitions are per se negative. Certainly maybe his opinions I don't agree with, but I think in some ways we're in better hands with him than many of the other tech titans, like the guy with the broken knee you just put up. So, I'll take Musk over Zuckerberg, but I think, I do drive a Tesla and use
I won't. As a shareholder, it's my two biggest stocks, Meta and Tesla, my two biggest stocks. Actually trust Zuckerberg over Musk. I would. Musk has done so much shady stuff. Like, people have no clue, like, what's really been going on over, anyways.
And use X and people will like send me messages. They're pissed at Elon and this and that. And I go, he's probably sees all of it, But I kind of think that they all see it all anyways. And you can say this about Google, Microsoft, Amazon,
Yeah. He knows a lot about us, knows where we drive, how we drive, what we search for on the internet, maybe Neuralink. He'll just know what we're thinking quickly. UAW, they got a massive win. Sean Fain, UAW president, he wants to unionize Tesla.
Well, I think that goal might create even quicker drive by Elon to build auto building robots. And that's what Tesla's building right now are robots that can build cars. So I think if the UAW really pushes hard enough against Elon, he might be really motivated to make robots to replace these jobs. So I don't think that that's a reality for Tesla. Tesla's a technology company, and I think they treat their workers pretty well, and people prefer to have a free market in California with stock options and the upside. Many Tesla employees are very, very wealthy because they've been with the company for over 5 years.
Accurate, 100%. Yeah, I mean, from what I've heard from Tesla employees and countless of them in different departments, things like that, most of them feel like they're underpaid when it comes to salary. But most of them have made a fortune, especially if they've been at Tesla for a while, off of Tesla stock. Maybe people that are hired in the last 2 years might have a different opinion on that. But yeah, there's definitely a lot of people that I even know that became multimillionaires from Tesla stock and how much it went up and how many shares they had and how much was vested over time and those sorts of things. People were able to retire from Tesla or go on and work in different industries or get different jobs that maybe weren't as stressful as Tesla. So no doubt, right? No doubt. Salary, not the most exciting, but the stock options at Tesla are always pretty magnificent. Next up here, Amazon is our favorite stock in Magnificent 7. I'm looking forward to hearing this one and sharing my opinion on this.
Apple ahead of its earnings, doubling down after market after warning of a sluggish holiday quarter. Joining us right now for a closer look, Dan Niles, Torrey Fund founder and portfolio manager. Good morning to you. Of course, we've just been walking through some of these employment numbers that are impacting the market. Things actually, for the most part, actually looking a little bit better right now across the board. But let's talk Apple, since that's one of the most widely held stocks in this country and in this world right now.
Sure. I mean, I think if you look at Apple out of the Magnificent Seven, it probably had one of the worst releases, because if you just look at the top line revenues have been cut every single quarter this year that they reported. And that wouldn't matter, except you're asked to pay 28 times PE for 2% revenue growth last year and negative 1% revenue growth this year. If you look at the alternatives you have Google and Meta growing between 9 to 14%. On the top line. You can pay 22 times for them. Microsoft's growing about 11%. That's at 32 times, but at least that's got an AI kicker. And the S&P overall is growing about revenues at 6% and trades at a 20 PE. So there's a lot of other stocks you can choose from where estimates are going higher. Amazon's actually our favorite of the Magnificent Seven because operating profits, they beat it by 40% when they reported. And so, we own Amazon, we own Meta, we own Nvidia. We like Oracle, not in the Magnificent Seven, but a cheaper way to play AI. And so I think there's a lot of alternatives beyond Apple.
So Oracle, I love the income statement side of Oracle and what they got going on in their business model over this coming years. I just hate their balance sheet, like just a horrible balance sheet of Oracle. Like for how big of a company they are and how profitable they've been over the years, like really bad balance sheet. I actually really like Nvidia. I don't own any Nvidia stock right now, but I actually really like Nvidia. I obviously have a huge position. Meta, it's number one position in the public count. Amazon's number 3. And I will say I like Meta a little better. And the reason being is with Meta, I get the very nice growth on the top line. I get insane growth on the bottom line. But simultaneously, I'm also getting a pretty darn low forward P. I mean, Meta's forward P right now is for sure less than 20. We'll see what obviously the earnings come in at over this next year, but there's a potential Meta's forward P could be about 15 right now, versus I would say Amazon's true forward P is probably somewhere between 40 and about 52 right now, right? So obviously significant difference between kind of Meta and Amazon there. Outside of that, I like Google. I don't own any Google stock right now, but I do like Google. I don't love it, though, just because they got a lot of crap they're dealing with on kind of the government, looking into several different sides there. Apple, I don't like the valuation. I don't like the fact that their business is in decline when it comes to their top line right now. And I also do think they're a threat. I think they're much more of a threat for the government to look in there and actually find things than actually Google or any of the other big tech stocks are. And I think they're actually going to be the easiest target if people want to make adjustments there. And by the way, in terms of the government, in terms of Google, if let's say the government said you can't spend any more to be the default engine for Apple, from my understanding, from what I've seen, there's been estimates I've seen anywhere ranging from $10 billion to $20 billion a year Apple makes off Google for being kind of the default search engine and those sorts of things. And so I do wonder if let's say the government said you can't do that anymore, right? I mean, my gosh, who's more of a hit to, Google or Apple? Because the way I think about it is, I'm gonna keep Google. Like, Google's the search engine I use for 10, 15, 20 years now. It's the best one, in my opinion, that I've ever experienced, and there's no reason to switch. On the flip side, if Apple suddenly stopped getting $10 to $20 billion a year from Google, that changes their profitability in a substantial way overnight, essentially, right? Which is a huge risk to Apple's business model, especially for a company that recently hasn't even been able to grow revenues. So those are some things to kind of keep in mind.
Growth and a reasonable valuation.
So the bottom line is, I don't know if it's more of a risk to Google or it's actually more of a risk to Apple.
Looking at Nvidia right now, $440 a share. What do you think that can go to at this point?
Well, Nvidia in some ways is the toughest one to figure out, because in the short term, I think they're going to have blowout results again. The numbers are going to go up huge. But the issue you're dealing with, and this is something I'm struggling with, is that investing is hard enough. You don't want to be fighting the U.S. government at the same time. And unfortunately, that's what you're doing, because they're saying Nvidia can't ship to China. That's 25% of Nvidia's data center revenues. And so not this quarter, not next quarter, but sometime next year.
It's not you can't ship to China. It's you can't ship certain chips, the highest end AI-related chips to China. It's not like they're saying, Nvidia, you can't sell anything to China. No, that's not the way it works.
You're going to run out of not being able to supply all the demand in every other region on the planet, and then you're going to have to figure out what the right growth rate is. And don't forget, there's other people like AMD and Intel, very far behind, but who are also trying to get a piece of the AI market. And at some point, that spending will slow down. I mean, don't forget, about a year ago, Nvidia was pre-announced, massively missing numbers and cutting forecasts because data center revenues had slowed down. So Nvidia is the one that I'm still kind of thinking through right now. And do I want to fight the U.S. government? And that's why it's one of the smaller positions we have.
Meta, is that a value play?
I like that. I like that strategy. And I might even employ that strategy with Nvidia over time, is making Nvidia a smaller position. Not a huge position, but kind of one of those positions where you're like, you almost treat it like it's a spec stock. That's the way I put it. You almost treat Nvidia, I might start an Nvidia position and treat it like it's a spec stock. I like Dan Niles' perspective on that, right? Because you look at Nvidia, the growth is tremendous. The valuation is not high at all. Look at Nvidia's forward P and look at their growth rates. Like, it's actually a steal deal. Look at their balance sheet. Awesome. Look at their products. I mean, flip and flapjack and amazing. Look at what Jensen's pulled off at that company over time. I like the perspective of treating Nvidia almost like a spec stock, making it a smaller position in a portfolio, not going too crazy with it, right? Because there is risk of, like, what if this growth stops? What if it slows down massively? What if it goes negative? Something like that, right? And that's obviously risk of the valuation. But then if you got that opportunity, and let's say the stock dropped 50%, it's a $200 stock, $220 stock, well, then you can make it into a massive position if you wanted to, because then you already went through the huge drop at that point in time, right? So I like that, man. I'm glad I watched this one, because I think that changed my perspective on Nvidia in terms of actually starting to position there and just making it a small position, a 1 to maybe 4% in a portfolio type position, smaller.
I mean, it's both. That's the beauty of Meta. And so that, along with Amazon, are our two biggest positions, because you've got 14% revenue growth at Meta. You've got it at 22 times. You've got a stealth AI play built into it, because they're using AI to help recommend videos to people to watch. And they're using AI to help increase the monetization of their ads.
Yep.
So you've got both at a very reasonable valuation. And so that's why it, along with Amazon, we like those two quite a bit.
Oh, yeah.
Dan, I know we always talk stocks with you, but just macro, I'm very curious what you think of both the jobs number that we just heard about and what you think the Fed may do about it, and how that is going to impact risk on, risk off kind of assets like the ones that you're talking about.
Sure. I mean, I think the biggest thing on the macro side is what happened on Wednesday when the U.S. Treasury said, hey, we're going to issue more bills at the short end and not at the long end. And you saw this massive rally in bonds, and you saw the 10-year, which at mid-October was sitting at 5%, with the payroll number today at 150 versus the 180 people have been expecting, unemployment edging up a little bit. We've posted before, we think we're going to get a year-end rally. The market is entering its best seasonal time of the year. November, December, January, over the last 50 years, it's up 4% in total.
Wow.
Over the last 100 years, it's up 4% in total. Okay. And the odds are even better when it's down going.
Wow, that's interesting. Odds are even better he was going there when you're in a down market going into that. And then obviously we're in a down market overall if you look on a multi-year basis. I mean, the S&P 500 hasn't hit highs since, when did the S&P 500 last hit highs? It was either the very end of 2021 or the very beginning of 2022. I think it was around either October, November of 2021. Same thing with the NASDAQ. Russell, oh my gosh, the Russell Wilson hasn't hit highs for probably at least 2+ years now at this point in time. And the Russell's a long way from highs. I believe the Russell's 20 to 30 percentage points away from new highs, right? So that kind of bodes well for like a recovery in many of these indexes in general, right? So, yeah, and I mean, at the end of the day, it becomes a self-fulfilling prophecy. If all these Wall Streeters are convinced year-end rally and they're all going to buy stocks because of the year-end rally, it creates the year-end rally because everybody's just buying. Oh, year-end rally, and just it just kind of, like I said, it becomes a self-fulfilling prophecy and just pushes the whole market up in general, right? So, anyways, appreciate you guys joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. This was maybe the longest video I've ever put out on the reaction channel. What a beast, a 47-minute video. Holy smokes, this is no dang jokus. If you're looking to apply to join my private group for this upcoming week, get access to all my course curriculums, get access to my 6- and 7-figure Discord chats, all that type of stuff, then check out the pinned comment down there, fill out an application. We can see if we can get you in there this upcoming week. Much love and have a great day.